first couple times I spoke, the first time I spoke about the fact that so many people do not have life insurance, or if they do, they really are inadequately insured. The second time I spoke, I showed you all an illustration on the power of compounding and building cash value. And knowing that when you woke up today, you were really excited about me speaking today, giving you
I couldn't sleep.
I knew you could. I thought what I'd do is I'd give you some idea as to how we can help customers, kind of dovetailing into what Raymond was saying. How we go about our business. One of the big problems in our business for new agents is they don't really believe, and they don't believe in the product, they don't believe in the service of what we do, and so as a result, they really can't go out there and effectively talk to people because they don't believe inside. And that's the biggest hurdle that a lot of these guys have to follow or try to get over. So anyways, what I did was I created the 4-pack. Things that you always wanted to ask but were afraid to ask. What I thought I'd do is talk about 4 clients at random, 4 recent clients, and what their situations were and how what we do helps them out. So, and I did it all in a little handout here for you so you can kind of follow along. Feel free to make notes, whatever you want to do. My first client is, I like to refer to him as Richie Rich. It's a male, he's age 39. This is how we talk into this, male age 39, female, whatever. He's married, has a 1-year-old daughter, and he works in the corporate world. He's a very, very high earner. He has amassed considerable assets, including his real estate, his home, and so forth. And an important fact here is he's maxed out his yearly 401k contributions. Some of the bullet points here, he already has investments that involve risk. For those in the investment field, you understand what I'm talking about there. He wants to protect his future earnings for his family. More specifically, his wife wants to protect his future earnings for his family. They live very nicely, very nicely. He would also like to, in the back of his mind, put more money aside for his retirement. He's maxed out his 401k, but that's still not a lot considering how this guy lives and how his family lives. $15,000, $16,000 a year is not a lot. Also, because he is a high earner, he's in one of the highest tax brackets. And he does have clearly a potential estate tax problem somewhere down the line. So when he passes on, he's going to have a sizable amount of assets that he's going to end up paying taxes on. So for him, the solution was very simply, hey, I need some life insurance because if I have $4 million worth of life insurance in place right now, and I should die tomorrow on one of the 70 business trips he takes every single year, he will automatically, his family will automatically have that kind of asset in hand that they can live on very comfortably for the rest of their life. So that's objective number 1. Guarantee his earning power into the future for his family. Secondly, he wants to put more money aside. Well, what he did was he decided to buy some cash value or whole life insurance. He's paying a lot of money every year. What he's doing is, in addition to what's putting into his 401k, he's building up considerable cash value. As it's calculated out, he'll have somewhere around $750,000 worth of cash value in his contract 20 years from now, which is a considerable amount of money. The important part, and this goes to his tax bracket, that money builds up in that policy, that cash value, if you will, that savings account builds up. It's all tax deferred, so he is not paying tax on it while it's building up. And that's a big plus for this guy because he's in a very high tax bracket. And the other point here is when he eventually does pass on, he will have that life insurance in place that he can use to settle an estate tax problem. If he leaves everything to his little daughter Lily, she'll have that asset, that life insurance proceeds, to help pay for any estate tax that he might tax on, or whatever the loss might be at that point in time. So that's a little bit of a complicated case, but a great case for me. And certainly, what we offer served a lot of purposes for this individual, a lot of purposes. Client number 2. This is maybe a little bit more typical about what I run into. It's a 50-year-old lady. She's single. She has a grown child. He's 25, and he's on his own, but she lives on kind of the lower end of the income scale. She's not a high-paid worker at all. What caused her to call me was the fact that she had a relative that passed away. The relative had nothing. The family had to take up a collection to take care of this guy's final expenses, his burial expenses, and so forth. They were kind of caught off guard by this, and it really upset her to the point where she said, hey, this isn't happening to me. I'm not leaving this kind of, liability on my family. So she's going to buy some life insurance to take care of that. But as a secondary item, she wants to leave something for her son. So this life insurance is going to do two things. It's going to take care of any final expenses she might have, and that could be anything from funeral to credit card bills, whatever the case might be. And also, she's going to leave some money to her son because her son is really her world. So, the third item is kind of my brag, if you will. It's a mother, age 46. She is a single mom also. She has a 9-year-old daughter. She's responsible entirely for this 9-year-old daughter. She has a good job. She has benefits, but she really hasn't done any kind of planning. And you have to know Rose to understand, she doesn't want to face this stuff. She doesn't want to deal with it. And this is my brag, it took 2 years, but we finally got this done. We finally got it done. She just didn't want to face it. She got the heebie-jeebies thinking about it, but she knew that she had to do something. So her primary concern, of course, was her daughter's welfare. If something happened to her where her daughter was going to have to live with relatives, and she didn't want to place this financial burden on those relatives. So what she did was she bought a life insurance policy. Now, as a secondary item to this, even though she has a good job with benefits, she really doesn't have enough retirement benefits. And she's 46, and so she knows that she's getting on in that regard. So she said, look, what I'd like to do, because I don't like to deal with this stuff, because I don't like to think about it, what I'd like to do is set up something where I'm providing the protection, the financial protection for my daughter, but also I want to be able to kind of systematically get some money aside. And so what she did was she bought a combination of term insurance, which is cheap, inexpensive life insurance. Okay, thank you, Joe. And also she's putting some money aside, building some cash value that will go along with her 401k to build a retirement fund. So, and then the last one is a male age 57 retired minister. I'm going to jump over this real fast. Bob is, his kids are grown. He's financially okay. He's not rich, but he's certainly not poor. He owns his house, has a pension. He's doing okay. He had a crazy idea. He wanted to leave a legacy. To his seminary. So the best way for him to do that was, he could do 2 ways. He could save money, and eventually he'll have something. Or what he could do is he could invest his money, if you will, I can use that term, in a life insurance policy, so that if he died next year, he would have the full amount of money that he wanted to leave as a legacy to his seminary in hand. And in the meantime, slowly but surely, he'll build up the cash value in that policy. If he ever changes his mind, he's got the cash value that he can pull out, and he's no worse for wear. So that's kind of a quick one there. My notes here kind of explain that very well. The last thing, as a little parting gift, people like these things. I left you a body mass index chart. We use this all the time in underwriting. This leads very nicely into what Ed is doing here. Sorry. That's a false alarm. The body mass index chart is really a pretty cool thing. You can all do it yourself. The second page, you put your height, your weight in there, and if 6 feet is 60 inches, by the way, for most people. And you can see your body mass index. The front page shows you where you fit into that chart. If you're in the green area, you're in pretty good shape in terms of body mass index. If you're outside that, on the lower end or the higher end, then maybe you have a little bit of work to do, and maybe you should talk to Ed. Yes, Ed?
The chart's in black and white.
No, but isn't the